Hey, Dave Knight here, 123daytrade.com. I believe I'm live. It says I am. Someone give me a thumbs up. I know it's an impromptu webinar that I'm putting together today. Trying to test out webinars on air here. I've used it before, and I'm using it again because I like it on YouTube to be able to have the recorded webinar. And since I use YouTube is one of my primary ways of communicating through the media, then I wanted to utilize this, what ends up being a Google Hangout, I guess is the best way of putting it. All right, so what I'm going to do is we're going to give another minute or so and then we'll get started. You're at my home office. I'm sitting here in my home office. You can see some of the books that are behind me. I usually keep the ones that I like the most behind me. So if you're watching some of the video content I put out, I usually have some of my favorite books that as it relates to not only trading but marketing, since I'm in that realm. Don't really want to be in marketing, but there's so much disinformation out there that I want to be able to share the way that you should approach trading as opposed to the way that some people teach it and charge a hell of a lot of money to do it too. So, all right, so let's get started here. This is, once again, my name is Dave Knight. I'm with 123daytrade.com. You are watching a live Google Hangout, and it's recording, and it'll be up on YouTube a little bit later on. And if you missed it, obviously, and you're watching the recording, thank you. I appreciate what we're going to do today is go over the 3 laws of day trading success. And if you've watched or seen anything that I put together, I'm tying all this together. Now this is going to end up being a kind of a mini webinar series, or not a webinar series, but it's going to be a mini day trading course I'm putting together to be able to put up here on my blog and also up on my website, and obviously here at YouTube. So I've actually filmed a couple other things along the way. My latest strategy I've put out, the ultimate day trading formula, that's kind of tying in to this, the 3 laws of day trading success. And I have a PowerPoint presentation that I want to go over with you today. And what I want to do is screen share that that PowerPoint presentation so that you can see it as well. Before I get started, are there any questions that I might be able to answer? See if I put the Q&A on. Okay, I've got the Q&A up. So if you have any questions along the way, just feel free to put them in there, and we'll get to them either during the presentation or I'll get to them a little bit after we're done. Okay? So what I want to do right now is screen share, if I do this correctly, the right screen. And that's hopefully that we will be watching the right one. And I want to present to everyone. It says I am screen sharing and presenting to everyone now. Can you see it? Yes? Okay, cool. All right, so we're here and we're looking at the 3 laws of day trading success. Once again, that's my quote that I use. You'll see me use it quite a lot. From humble beginnings, greatness comes, and that's been my motto for a long time. My name again, David Knight, and I go by Trade Craze at Top Step Trader, and also just been a nickname that's stuck for quite a long time now. Some people call me Tiger, but that's not here or there. So what I want to get into is the 3 laws of day trading success. Now, day trading law number 1. What is day trading law number 1? It's to cut your losses short. I know that's rocket science right now, but if you think about the law, just the law of cutting your losses short, what is the component of it? It's a component of risk management. And I believe humbly that if you have, just think about a coin flip type of situation where we know that the heads versus the tails is historically is a 50% winning rate, that you're going to win 50% of the time and you're going to lose 50% of the time. Now, if you're cutting your losses short, that is what I call R versus P. Now, R stands for risk and P stands for profit. Now, Van Tharp put together what I believe is probably the one of the best solutions to understanding risk that I believe that you can read. And I would highly recommend any of Van Tharp's books. His Trade Your Way to Financial Freedom, I believe, was his very first book that I picked up. I don't know if that's his first book that he wrote, but it's the first book that I believe that I read from him, and he introduced to me the concept of R. R stands for risk, and what you have to do is determine what risk means to you. Now, I trade the crude oil market, and risk, I've defined what R is. Now, 1R, a component of risk, is what you determine 1R to be. Now, my ultimate 1R in the crude oil market is 20 ticks. Now, each tick in the crude oil market is $10 a tick. So 20 ticks is $200. So if this is my ultimate R, in other words, I'm not willing to risk any more than $200 in any given trade that I put on. But with that being said, what I normally like to risk is what I call 1/2 R. 1/2 R of the 20 brings it down to 10 ticks. So in other words, $100 risk per trade. Now, the profit side of that is the other component. You got to take more away from your trade. So we're going to talk about that as it relates to day trading law number 2. Now, day trading law number 2 is to let your profits run. So now we have 2 laws. The first component is risk, and your second component stands for P, or P for profits, or in this case, let profits run. Now, what I believe is it relates to a component, it's a component of trade management. So now we have 2 components, right? Law number 1, that component is risk management. Law number 2's component is trade management. Let profits run. You got to think about this in different ways of approaching it. So if the first one is to cut losses short, now you're trying to let profits run. So in other words, you're trying to maximize your profit in any given trade. You want to take more away on your wins than you're willing to risk on your losses. The best way that I can describe this to you is in a risk to reward type of thing. So a reward to risk. 2 to 1, 3 to 1. I think that you should be going after a 2 to 1 target every time, at least at minimum, every time you put on a trade. For instance, we've determined that 1/2 R is our normal risk that we want to put on. So 10 ticks are $100. That means that our minimum P, or P for profit, should be at least 20 ticks a trade. And that will give us the ability, even if we do not have a 50% win rate, we could still go to 40% and perhaps even to 30% and still end up as a break-even trader. So in other words, you don't have to be right even 50% of the time if you have a component of P into your trading strategy that you put together, or your trading plan. So 2 to 1, 3 to 1, 4 to 1, 5 to 1, whatever you can go after. I like to go after, when I first start a trade, a lot of times I sit around at 6P. Like if I look at today's trading, 6P was, as it relates to my trading today, and I update my spreadsheet on a daily basis. If I look at P today, P was 26 ticks. So if you look at that, 6P today is 156 ticks, and 78 ticks was a 3P target. So, and if you looked at any of the trading today of the markets, it went to the moon. It hit the after the inventory report came out today. It went to its pivot point, and then it went all the way up to R2 today. And all of this before, I mean, it just continued to make a move upon a move upon a move. And to be able to maximize your profit, that's kind of the goal of you as a trader. You're trying to maximize this profit. And this falls under what I believe is called the 3 V's of trading. Now, what does that mean? 3 V's of trading. That to me means velocity, volatility, and volume. Now, velocity is how fast is the market moving. Volatility it relates kind of to the risk component, the volatility of the market. So how much is the market moving inside that velocity and inside of the movement that you've got right now. So the best way that I can just describe this to you is if you have a 5-minute chart in front of you and you're looking at a 5-minute chart. If you take a 5-minute bar chart or candlestick chart and you take that against what's called a tick chart, you can have 100 bars in the same period of time than you would have on a 5-minute bar chart or candlestick. The candlestick or the bar chart only shows the open, high, low, close, whereas the tick chart shows, say, 100 bars or 5 bars. A measurement of velocity is how many bars is printing in that time period. The other side of that is the volatility. And you think of volatility, you think about how far is it moving up, how far is it moving down. Now I measure volatility, and what I do pretty much every day is I look back at the last 9 trading days and I average all that out, and it comes out to what I believe is the average range, or what I call the ADR, the average daily range. For instance, today was 2.12, which translates out to 21.2 for the R. But if you think of R as only 20, 20 is my maximum that I'm going for, even though today is at 21.2. So it gets kind of confusing, but think about R is just can't crest over 20. And then you have your 10. Now you can adjust your 1/2 R target to, instead of 10, it could be 11, it could be 12. But if it goes up, if your 1/2 R goes up over 20, then you got to look at maybe a 1/3 R or a 1/4 R. You still are trying to go after a 2 to 3 to 1 target. But what this is all meaning is that if volatility is increasing, if velocity is increasing, that also means that volume is increasing. Now, volume, a lot of times you see me talk about volume. Volume is, I look at it as it relates to like a red bar volume or a blue bar volume. I look at spikes. I look at what I call high volume spikes, HVS type of trades. I look for situations where the market looks like it'll be the first indicator of a trade. And if I have equal volume on both sides, that is something that I call my tiebreaker. I'm waiting for one of those areas to show up, like yesterday in trading, where we had 2-to-1 red over blue and volume spiking up, and it was a determination that the market was ready to go up. Today we had a lot of gunning and running of the blue bars, and it continued to make a movement up. So we gun and run blue stops today, and it confirmed a trend. So you've got to be able to use the information that's on the chart in front of you to make the right determination in any given day or any given trading opportunity that you have. That's what I call the 3 V's of trading: volume, velocity, and volatility. Now, what's day trading law number 3? Rocket science here, right? Take profits on the ride. So if you look at your 3 trading laws, now the first law, cut losses short. Your second law, let profits run. And your third law, take profits on the ride. Now that is a component of money management. So now, if we look back, cut losses short is a component of your risk management, which is the most important component and should be your key that starts every trading plan. How much are you willing to risk per trade? The other side of this is let profits run. That's your P. How much are you willing to make per trade on a minimum basis? Is it 2-to-1 against your R? That's where R versus P kicks in, or P versus R, however you want to look at that. P stands for profit, R stands for risk. And the third component right here is take profits on the ride. This is a component of money management, and the best way that I can describe this is a concept that I learned from reading books and strategies from Jesse Livermore and how he does his things when he was living. Now Jesse Livermore, when he was living, would tell you that the only safe money that's in the market is money that you take out of the market. So if it's in the market, it's not safe, in other words. So the best way that I can give you an example is think of it this way. Let's say that you start with a $10,000 trading account and you build it up to $15,000. So in other words, you have a $5,000 gain. Now, what you want to do of that $5,000 is take away, and this is your first goal. So let's say that once you make your first $5,000 in trading gains, you want to pull money out of your account. Now, my suggestion is you pull half of your wins out of your account. So in this case, if you have $5,000, you take half out of the market. So you have $2,500 that you take out of the market. Of that $2,500, you need to subdivide that $2,500 into more. Think about another 50% in each way. In other words, your $5,000 gain is a $2,500 withdrawal, and of that $2,500 withdrawal, you want to take half of that. One half of it you need to put into what I would call a sludge fund or a reserve account. So in other words, it's money that would be going back into your trading account if you need to replenish some of your day trading losses that you might accumulate so that you can stay at the level that you are. The other side of that, the other half that you withdrew, are the other $1,250 of our $5,000 example, is money that you take, and it's your money, it's your fund money, it's money that, I mean, you can divide it again in half and half it again, you know? So you can say, well, you know, what is that? 625 goes this way and 625 goes this way. So I'm going to give 625 to my wife. I'm going to give half of a half to my kid. You know, that's your money. That 1,250 of the original amount of money that you took out is yours to do whatever you want. That is how you reward yourself as a trader. And that is the only safe money that you have. The only safe money that you have in the market is money that you pull out. And that's the Jesse Livermore way of doing things. And that's basically the 3 laws of day trading is the way I see it. So I've determined when I think about it, the 3 laws, you know, it's just stuff that we learned, right? It's stuff that we've learned in our past. If you've read any books whatsoever, you've learned this stuff. You know, cut your losses short, let your profits run, take profits on your ride that you're making. All of that is your three laws. The three laws are really risk management, trade management, and money management. Those are your three laws. I've just determined how you can use these laws together so that you can make more money as a trader, specifically as a day trader in the markets, than you lose or give to the markets. So I hope that you enjoyed that presentation itself. I'm going to stop that part of it, the on-screen screen share, and see if we have any questions at all. So I'm open for any questions whatsoever. This was a very impromptu webinar. I wanted to put it together very quickly. I had a question, what prompted you to do the webinar? And I just wanted to get one done. I wanted to get through the webinars on air. I wanted to put this out. This is kind of it's a mini course that I've put together, which I want to complete the last part of this so that I can put it up on the web and people can go through it. That's kind of the idea behind it. All right. Any other questions before we call it a day? I want to thank you all for coming out today. I know it's very quickly. This is recorded, so if you missed any of it, and there's a message, is this recorded? Yes, I have recorded it'll come up on YouTube. It's a Google Hangout. Webinars on there, the way it works is that it records and then it puts it up on my YouTube. So it'll be under my YouTube channel at Trade Craze. I'll link to it on an email and fire it off of the email server as well so that you can check it out, any of the area that you missed. This is part of a course that I'm putting together. That's why I wanted to do the impromptu webinar. Any other questions before we call it a day? Obviously, I got more training that I want to cover. This was just scratching the surface, or if you think about the iceberg tip, we only at the tip of the iceberg right now. There's a lot more underneath it. My goal is to help you as an individual trader to get into the win column more often. All right, I don't see any other questions. So let's call it a day. Let's call it a day. That's all. I want to try to keep this a brief type of webinar here today, and we will continue our chat in the future. It's Dave Knight here from 123 Day Trade. I hope you enjoyed this brief 3 laws of day trading success and how I approach the market in any given day. God bless, take care, and I'll see you on the next video I put together.